All right, cool. So week 5, class 9 is options part 2. This is gonna be my last class for you guys. I believe there's one more class left. It's gonna be taught by Ninja. So today we are gonna do options part 2. So you guys already know I'm Vibey. Quick disclaimer: Wiseguy offers general trading information and education that is impersonal and does not take into consideration factors such as your trading experience, personal objectives and goals, financial means, or risk tolerance. If you have any concerns, it is suggested that you seek advice from a professional financial advisor. Keep in mind that past performance is no indicator of future results. All right, cool. Options part 2. We're going to be going over picking strike prices, how to pick them, at least how I pick them. You don't necessarily have to follow how I pick them, but these are general key things that I look for. How to enter and exit a trade, and then we'll also be going over hedges. So these things on the right here, these pattern breakouts, EMA breakouts, VWAP, orb strategy, 645 rules, 3x15. This should actually be 3x5. Whoops. Consolidation breakouts, etc. We're gonna go over these when we go through the strategy portion of the class. All right, so strike prices. So I pick strike prices based off the type of play I decide to proceed with. So if I am making a play, I'm looking if it's going to be either a scalp, day trade, or a swing, or a leap. I set PTs pretty much of where I want to go. And then when I view the contracts, I'm looking for open interest and volume. So anything that everyone is technically buying, that's also considered following the trend inside contracts when you're looking at them. Anything for short term, I look for realistic PTs for scalps and swings. And then for monthlies, I look for open interest, volume, the high nodes on VPVR, if you guys remember that. And then I factor less data plus more delta on all of my plays. So we'll go over some examples here. So let's look at Apple here. All right, so if we look at Apple here, right? So if I want to hop into Apple play, right? So I'm just based off VPVR. This is gonna be the bottom of the support, right? This yellow line. You guys are able to see this, right? Yeah. Okay, cool. So this yellow line is gonna be my support. So typically, if we're sitting at 120, when I'm developing a play, I know that I have to break this area right here, right? I have to break out of this whole zone right here, because this is a high node. People like to buy in here. So if I'm looking at contracts, my next PT here, from what I taught you guys with VPVR, would be the next consolidation point, right? This would be a PT right here. And then another PT is going to be up here. 124. So I'm looking for strike prices that are in this range between a 120, a 121, 122-ish, all the way to 124, 125. All right. You can look at this on a bigger time frame just to see if there's any other high nodes. So you're seeing around here, we're seeing more people start buying in around this range. So 126, 125. So realistically, this is the dip, and then it's trying to push back up somewhere around this range. So ideally, so if we look at Apple contracts, right here, right? So we have a 120, 121, 122, all the way to 125. So if I'm looking at these, we're looking at open interest, and then we're looking to see how many contracts have been like created, right? And then the volume is how much of these contracts have been traded around. All right, so we see that 125 call has 46,000 in volume, right? So this has been traded so much. So we know that this is one of the big plays, right? So if we're looking at this, we start looking in at our theta, right? So we have a $12 theta, with a $21 delta. So every dollar move, if this moves up $1, we already cover our data. So your risk to reward here it's pretty significant, right? So this right here would be a good place. So 125 has the highest OI, highest volume. The data is not bad, and the delta is good. There's nothing wrong with going in the 124, 123, 122, 121. The reason why is here's the downfall, right? So if you go to a 123 or a 122, these are still realistic PTs, right? So like we were here, right? We're at the 120. This 122 is a PT, and then this 124 is another PT. So if we look at the data is getting bigger and bigger, right? The lower the contract is. At 120 is $17, 121, 17, 122, 16, 15, 13, so forth. The delta still outweighs this significantly. So if you're scalping, typically I get the closest to in the money, right? If I'm scalping, I always want to be closest to in the money. If I'm day trading, I'll set a PT that's realistic, that I could see this ticker move. Because if we really look at this at the 3 minute, you can see what kind of ticker this is, right? So if you see like the price here is from 120, 120, 50, it moves by 50 cents. I mean, the bigger you make it, but these typically move by the penny. So these don't have big jumps in dollar moves, right? So if it doesn't make big jumps in dollar moves, this delta won't make a big roll. Does that make sense? Like, for it to make a dollar move, it makes a dollar move in maybe a day, right? So is it worth a swing for this? Would you guys say it's worth a swing? If the delta, the delta barely makes a dollar move a day, is it still worth a swing? No. It's bad risk to reward, right? So that's one thing that you always need to take a look at is how do these tickers move? So since we saw here that, like, look how much it moves in a typical, this is a sideways day, right? It moves maybe $1.50. This day it moves $3. These are literally absolute bottom to absolute top, $3. $2, $2.50, right? This is on a sideways day, so. What tool is that? Yeah, it's basically kind of like the ruler. Well, it is the ruler. You can see how big of a move it makes, how long, how many bars it is. But that's always one thing you want to factor. One, market sentiment. How's it? If the market is sideways, if the market is trending, check your tickers and see if it moves by the dollar or if it moves by the penny, because those are key factors you want to look at in your contracts. So we see here, if we pick a 125, to me, this is going to be a swing. If I go for a 125 call, this is a swing because I don't see it bouncing from 120 all the way to 125 around this area, anywhere above here in a day, right? If I'm doing intraday, if I'm just scalping, I'm going to go to the closest. I'm going to take the 120 or the 121 because theta won't matter because I'm not swinging it. So I'm playing high delta, has pretty good IV. It has a decent amount of OI between the 120 and 121. And then we want to get in the money as fast as we can, right? So that's how I view a contract, right? So if we look at another ticker, someone else give me another ticker. All right, I'm just going to do the first one. So Corsair. Okay, so Corsair is in a consolidating range right here. Right, this is our consolidation range. So this top is 34. My first PT would be, let's take a look. So our next consolidation area is right here. Right. So a break on this range box, if it breaks to the upside, I'm looking at either the 36 all the way to the 38 intraday. If you're doing swings, you still want to go further out. We have another PT right here. You guys see how that works? You have your high nodes. And then anything beyond this is pretty much running. But we can't expect to see this much of a move in one day, right? So if we look at Corsair contracts, we have 35, 40, 45. So what has the most OI? It's the 45 call, right? The volume in these two have been traded a lot already, the 35 and 40. So this is basically saying for the 16 April, because these are monthlies, also got to factor it in, these are monthlies now, right? These are not weeklies, these are just monthlies. So in a month, people are expecting it to go to 45. A $4 theta, which is really good. It's very small with a decent amount of delta, right? So everyone's expecting it to reach back to where it was previously. So anywhere in this range here is where everyone's expecting this to go to in a month. So if you do 35 contract, would you get out when it hits 35? No. So the way I set these up is you always want to scale out, right? So if typically when I scale at my first PT. That's just me. Some people can scale at 20%, some people scale at 50%. Depending on how it's actually trading, it depends how I scale. So if it's getting sideways movement and it's having a tough time breaking this resistance, or if it's having a tough time breaking out of this resistance here, if it has a tough time breaking this red resistance here, possibly I can scale out. Volume on calls, total amount of time contracts have been traded. Yeah, so anytime a contract gets traded, it gets added to the volume. The open interest is basically how many contracts are available. You can scale out if you buy one contract, so would you recommend selling the contract at 35? So here's the thing about only buying one contract. You reach your greed zone pretty fast. So depending how much momentum is behind it, I'll show you guys how to see that. I'll show you guys strategies to use after this. So we'll come back to that question. So typically that's pretty much how I look for contracts. So since Corsair only goes by monthlies, so we're looking for anything that's big. So 45 is going to be the biggest. So if it's a monthly, look for something with high OI, the highest OI, and then typically that's going to be your safe route, because that's pretty much what everyone's going to be playing. So either pretty much people are going to have roughly around the same stop loss, I would say, depending what their threshold is. But your best bang for the buck is to find something with high OI and high volume. The volume here is low. That means people are still holding on to these contracts. Right? It hasn't been traded yet. Compared to like the 35 and the 40, people already took profits. You can already see it here. Does that make sense? Having high OI or high volume better? It really varies. Having both high is sometimes a good sign. Sometimes it could be a bad sign that people like. If you look at GME, you're gonna see GME have high OI and high volume because it's an IV play and everyone wants to get in at the cheapest price. But those contracts have been traded around so much. But yeah, so intraday, look for something that's closer to in the money. You can play in the money if you want, but you're paying a high premium. I mean, that's all it really is. So OI is basically the amount of contracts available, and volume is how many times that contract has been traded. Why would 35 be worse than 45 since it has high volume? The reason why a lot of people don't get in the money is because the IV goes down once it's in the money. The IV starts becoming very slim. So you're just basically reaping on delta at that point once you're in the money. That's typically what happens. That's why the contracts that are out of the money, people typically always buy out of the money because this one, it's cheaper, and two, you have a lot more to gain. All right, and then let's look at something that's different. Like here, I'll show you guys something here. Look at SPY. Look how these contracts are on SPY. So you're gonna see this all the time. So 390 call, 6,000 OI, but 64,000 volume. Right? That's how often these contracts have been traded around. So not having or having a higher volume and a low OI is also it's a gray area. So there's no good or way to put it. There's no bad way to play it. But typically you want to get something with a decent amount of OI and decent amount of volume. That's typically how people play. People always want to get in where something that's most traded, because if you get something that's only been traded, something like this, right? The 414 call. The volume of this is 4. That means this contract's only been traded around 4 times. So the chances of you finding a buyer for this contract is going to be very slim, right? Because you could buy this contract because there's contracts available. But the question is, if you decide to sell it, will there be a buyer? Does that make sense? Cool. But yeah, so like intradays, everyone's always between the first two. Typically anywhere between the 390, depending how SPY is moving the day, if it's trending or if it's sideways. If it's trending, a lot of people can literally play this all the way to 395. And then same thing from 390 to 385. A lot of people play it that way. So depending on how SPY moves, because SPY can move, right? We've seen SPY move like $10 days on big drops. Right, so if we were actually taking a look at SPY, so at 389, right? We closed at 389. Let's take a look at 1, 2, 3, 4, 5. Let's take it to the last 5 days. Right, there's a big range that's right here. Right, that's 393 to 397. This is where it starts getting tough on how you pick your contract. So people pick either the median or the closest that's in the money. Right, so if we're at 389, right, let's say we open up at 389 again. I will be playing 390 call. If I were to hop in puts, I'll do either a 388 put or a 385 put, because knowing SPY itself, if it downtrends hard, right? Like every time it does a downtrend, it's a drop, right? It's a drop. These are all drops. All right. So that's something you should take a look at. How does price action move inside the ticker that you decide to play? Is there a volume indicator for the volume of puts versus calls? I'm not sure if they have it on TradingView, but they do have it on Thinkorswim. It's more of how many people are buying in and how many people are selling. All right, so does anyone have any questions on how picking contracts work before we move on to strategies? We'll take like 2 questions and then we'll move on. If anyone has questions, if not, we're going to move on. Is there a certain theta that you want to stay below? No, typically not. If you have questions on theta, I would look back on the last class, the options part 1 video, and then you can see how we pick theta and how theta makes a difference into your play. For SPY, what kind of dates do you look at? So SPY's contracts expire every 2 days. So they expire Monday, Wednesday, and Friday. So depending what I'm thinking, if I am playing calls, I'm gonna play the closest expiration. Because SPY can move up and down any day, right? So I want to get the short amount of time, the cheapest contract with the highest probability of being green. So keep in mind expirations if you're scalping, day trading, or swinging. Those all will make a difference. Myself, I never swing any indexes. That's just not me because theta is extremely high for if you were to swing an index. Because, let's see. Are we able to see it here? They're not going to show yet. But typically, the theta on indexes, they range anywhere between $70 to $100. Makes sense? So based off of what you decide to play, so if you look back on Apple, just make sure you're checking how much the price actually moves. Like what's the max gain? Let's say on average this makes about a $3 move, right? That's what it looks like. On sideways days, it barely moves $1. So keep in mind on how one is how the ticker moves. 2, a realistic price target, right? Realistic price targets for me are next consolidation zones, right? Those are things that I should be able to hit if the play goes well. So price targets are based off if I'm scalping, day trading, or swinging, right? Of course, if you want to swing, you want to get it further out of the money, so you have a more bigger price target, and then you can start scaling technically at these levels. Make sense? Cool. Moving on. Let's go to entering and exiting. All right, so this is the fun part. Entering, there's so many ways you could enter a play. There's things that you look out for, which the 645 rule to 945 rule. This is basically not trading within the first 45 minutes of market open, or first 15 minutes, right? So this 15-minute rule is basically the same thing. I'll show you guys what this 3x5 is. They're 2 different things, even though they're both 15 minutes. We'll go over algorithms are one way to enter, EMA breakouts, VWAP breakouts, chart patterns, consolidations, and the orb strategy. This is your opening range breakout strategy. All right, so let's do the 645 to 945 rule. So everyone knows this. The first part of the day is the most volatile day, right? the first 15-30 minutes. The first hour basically is the most volatile, right? It's not meant for beginners. You can get burned real quick because we see crazy price movements like this, big moves to the downside, right? We get choppy parts like this. It's just not, if you don't know what you're doing here, you can get burned real quick. That's basically what it is. So depending on what time zone you're in, 6:45, 9:45 rule is basically skip the first 15 minutes until you actually find the trend. And then from there, you can start entering plays. So that is the 6:45, 9:45. We're going to go over the 3x5 rule. So the 3x5 rule is basically a 15-minute rule. So it works the same, right? So instead of not trading this area, I'm going to show you how to use the 6:45 rule and combine these two, the 3x5 rule. So what we typically want to do is, let's go back to Apple, or somebody else give me a ticker. And I'll show you guys how this works. First person, PLTR. All right, so the 6:45 rule. So let's say this is 6:45 right here. Whoops, this is 6:45 rule here, right? This white line is basically when we can start deciding to take a trade. Right here, right? So if we use the 3x5 rule, basically 3x5 rules means 3 candles on the 5-minute time frame, right? So 3x5 gives us a high. So we have our opening high, and then we have our opening low, right? This is our 3x5 rule. So this will give us our opening range. Let's extend this. All right. So this white line, let's just make this yellow so everyone can see it better. This is our 3x5 rule. We can switch back to our regular time frame. I trade on 3-minute. Doesn't necessarily have to mean you have to, but I just prefer the 3-minute. So we have our first 15 minutes all right here. So what we're looking at is, we're looking at what was the highest point and what was the low point within the first 15 minutes. So this basically allows us to say, if it breaks the high of the opening range, we could start hopping in calls. And if it breaks below, we can start hopping in puts, right? Because by that 15 minutes, we should have either a trending market or a direction on where the stock wants to move. All right. So unfortunately for this, PLTR consolidated. So typically our entry, where is this thing at? We could have either entered here. This would have been your confirmation to enter. Let's make this bigger. For me, confirmations would be either a break above and a retest. So I could have entered at this candle right here. This is the doji. You guys know about this, right? Everyone knows about this candle. This is a sign of a reversal. So this is literally a break and retest. So you can see it break here. So if we were to actually look at this on how it was that day, let's look right here. Whoops. Let's cancel this, set it here, and we'll actually map out this whole play. Right, so here, just based off this, I'm looking at either a 24 call. If I am scalping this, typically I day trade, so I'm looking at the 24 call. This should be out of the money still, but typically yes, so 24 or 25 call. So if we were to look at the contracts, we won't be able to see last week's contracts, but 24 is already in the money. During this time here, probably would have been out the money. It would have been here. So typically would be either the 25 call or the 26 call. These two are perfectly fine. For intraday, you can't trade options pre-market? No. So I would look at this, the 25 call one. Let's take a look. $7 theta. You could technically swing this since the delta covers it. Decent amount of IV, has good OI, and has a good volume. So if we were to hop in this contract, we would technically be able to sell a contract immediately. All right. So if we were to hop here, technically we would have got the 24 call, but we can't view that contract. But yeah, we would technically pick the 25 call then at this point. The 25 call, what else do we have here? We have the 26 call. This has a good amount of OI, good amount of volume, no problem. You could swing this contract technically. So we're always looking at the theta and the deltas, remember. If it's good enough to swing, the delta outweighs the theta. To me, that is a good swing. That's a good contract to swing. All right, but yeah, so that's a 3x5. Basically has your opening range. This is very similar to what the orb strategy is. Where is it? This orb strategy. It literally factors in the same thing, except I believe it's pretty much kind of like I want to say an algorithm, but if we were to actually show this, there is what do you call this thingy? Indicator. Yeah, there's an indicator called the orb. So if you guys want to look it up, I'll show you how it works. It's going to be this orb indicator by Ravi, this guy, right? So if we were to look at this, let's look at how it really works. We can't see on a regular time frame, but pretty much this is how it works. So right, we have our high and we have our low. A break in the high basically means to go long, and a break in the low means to go short. Right, these are the ranges that we're playing in. We don't play inside this range at all. We always want to either hop in when it breaks above or breaks below. That's pretty much orb or the 3x5. It literally is opening range breakout. Make sense? It's called the orb strategy, my bad. It's gonna be right here. Orb indicator, Pugaz, Ravi. So the thing is with this, so if we were to actually drill into this, it gives you the session time. So it starts your opening range in pre-market and it ends it at the end of the day. All right, you have the option to show your previous day close, previous day high and lows, right? So basically you're using the previous day highs and lows to see possible resistance, right? This is a previous day high, right? PD high. And when it drew out that this is the high range, so it has to break here in order to continue running, and you can see it reject at these spots. Here, right? Makes sense? And then of course you can always change the time frame. A lot of people play the orb on the 15. It's pretty standard. You can use it on 3 minute if you want. It just narrows it down. But typically a lot of people use the orb strategy on the 15. Make sense? It just says high and low for me. It won't work if the ticker's not running. So remember, this orb strategy has to be on a market open, right? So we need to find a market that's open. So right now crypto's 24/7, so we're looking at it on crypto. So typically if we were to look at it on on the morning on any ticker at any morning, we would start seeing lines populate at 9:15 whenever I set this time. Right? You can set it to whatever you want. But this is just another strategy to use when entering and exiting a play. So of course you're gonna look at your possible PTs. You always want to make your possible PTs. You could throw this on, and then this can be your confirmation on when to enter a play. And then yeah, run it out, start scaling out once it starts hitting your PTs, and then just make sure you don't write it back down. Set a stop loss, set a trailing stop loss, do what you need to do to secure a green. But yeah, that is the orb. So orb's pretty straightforward. So that's the orb strategy, and 3x5 and the 645 will all combine in one. All right, so algorithms. Algorithms, everyone knows what an algorithm is, right? Basically anything that's coded to remove emotion in order to grant you buy or sell signals. Everyone knows algorithms, right? It's the easiest thing, less work, all that. So one algorithm that is free for everybody is Super Trend, right? Look at this. This is Super Trend. I'm not sure if you guys use it. It's pretty decent for people that want to get into algorithmic trading. I would say it's profitable, but it's a really great area. Me, myself, I don't use it. I don't use Super Trend. I just don't like it. But yeah, this is pretty much algorithmic trading. There's also another one that combines EMA breakouts and algorithmic trading, which is called Fortuna, right? These will give you buy sell signals, right? So right here it says buy, sells up top, right? But yeah, there's so many algorithms out there. Like, look at this. It does literally a whole bunch of things. It shows you the trend, right? So visual representation. It's called Fortuna. Fortuna 2.0. I don't use this, but I'm just showing you out there what's out there. There's algorithms out there that literally take your emotion out of trading, pretty much. So that's pretty much what's out there. There's all sorts of buy sell. There's like I'm pretty sure there's Ichimoku Cloud signals. Like there's I don't think this is one. But there's a whole bunch of stuff that are out there for buy sell. What does Vibe algo do? That's my own algo. You can't see it. That's secrets. Those are top secrets. Can you take the code from both algos and put them together, make your own algo? Typically you can. Something's open source like that, you can. If not, you would have to write your own. But yeah, besides the point. That's algorithmic trading, is basically things that generate buy, sell, take profit, all that other stuff. Those might help you if you're too stuck on your emotions. That'll definitely be helpful, but it could give you a buy signal, but are you really gonna buy? Do you have a confirmation on the buy? It really depends. It's up to you. But typically algorithmic trading is to remove your emotions from it, so just keep that in mind. Moving on, EMA breakouts, 934, 821. Personally, I use the 934. Let me show you guys what this is. Bang. So 934 breakout. Anytime the 9 crosses the 34, so our 9 is our green and our 34 is our red. So I typically use this to get into a play. This to me is my entry. When the 9 crosses 34, I'm in puts. And then typically once it starts making its reversal, once I see that it's back If the EMA starts trending back, I'm gonna cut wherever I see fit, right? Typically, one way to play it is if your 9 crosses your 34 to the downside, a lot of people play it until that 9 crosses back on that 34 to the upside. But me, I want to secure as much green as I can, so I will start scaling out. And if it rejects and I'm still holding on to runners and it continues to drop, by all means. But for me, the moment it starts looking like a sign of a reversal, like on a bounce, so if it bounces here, I'm gonna start scaling out once these candles start going above the 9. Those are scale outs. So this pretty much can work on anything. If we look at SPY, right? 934 breakout, you'll get things like these a lot, right? It'll cross here and it'll cross here. You'll see a lot of these. But for me, typically if I decide to get in a position, on an opening day, this is what I'm using, is a 934. I don't use that 934 breakout to find a reversal, because you're gonna lose out on potential gains, right? Because let's say this was a reversal down here, your entry technically wouldn't be up till here, right? This is why this doesn't work on reversals. But you'll see like typical trading days. Let's find a trending day. Let's find a good trending day. Where's that day that BA was just trending, right? Something like this. On a trend days, these work the best. So let's say BA, right? Straight uptrend the whole day. If it crosses here already in pre-market, I could technically hop in right at open, right? But you don't ever know if it'll reverse on you. So to me, if I use the 934, if I'm just playing strictly off the 934, this thing, I hop in on the crossover and it never crosses, right? Until about somewhere here. I take profit here. I continue to ride, it never breaks the 34. Continue to ride again, take profit here, right? Then we start seeing this consolidation area, right? So we start seeing this consolidation area right here, right? You guys see that? It just starts consolidating. So either it can make a push again, but it has to break this previous high, but it doesn't. So the moment it taps this and I notice that it doesn't break, I'm probably scale out here or literally get out the whole entire play. But 934 EMA is a good strategy to use on a trending day. I mean, it's pretty bulletproof. You guys can see it here, it never crosses the 34. And it literally follows the 9 all the way up. Makes sense. I don't use this. I don't use any of these EMAs for swing trading. These are strictly, for me, is only to enter or exit a position. I don't use this to judge any swing trades. Because, I mean, if you look at it on the daily with a 9 and 34, I mean, you could technically play it, but to me, it's too noisy. I just don't like it like that. I know a lot of people play, they look at the daily on like a 200. So if you were to look at it on a higher EMA, people play on the break of the 200 EMA. That's one way to play it. 714 is good. I feel like 714 would be way too sensitive. 714 on a daily, is that what you're talking about? Alright, let's take a look at 714 on the daily. Yep, 714 on the daily definitely would be. We can see a break right here. It never crosses back. There's no, like, to me, so if you use EMA breakouts, when I look at these, I want a confirmation of a candle literally breaking the highest EMA. The lowest, the one that's in the bottom, or 3 to 5. This was too sensitive to me. I can't use this 3 or 5. Or the 7, 14. Let's see what else is there. Another one that people use is the 821. 8 and 21. It's pretty much about the same thing. Alright, basically these work fine on trends. So if we go back to that day, what day was it? This day. Same thing, right? Except your entrance is here now at market open, and then you ride all the way. So technically right here is when you start looking to get out of your full position if it does cross below that 21 EMA. Any questions on EMA breakouts? It's pretty straightforward. It's literally a trade the trend type thing. Okay, none. We're moving on. VWAP breakouts. Some people use VWAP to trade. Let's see. Take this off and just leave VWAP. All right. So same thing here. Anytime a break of the VWAP or a retest of the VWAP is when people enter. And then your take profit points are literally anywhere, right? Anywhere where you see fit. You just don't want it to ride all the way back down. That's the biggest thing. And then same thing, on the moment it crosses over, you can hop in puts or shorts and just ride it. Take profit wherever. It's a fairly simple strategy to use, but taking profit is literally up to you, how you try to take profit. So when the candle crosses up, that's a buy sign. Technically, yeah. So typically, if we see a full candle close above, a lot of people like to hop in it. A lot of people play off VWAP tests, for one. Me personally, I use VWAP, but I don't use it to enter or exit a play. I use it to see if there's going to be more momentum for it. So if I see, if this was trending from underneath VWAP and it breaks VWAP, and I get this confirmation that it closes above, then I know it should still have more room to run. All right, so well, in this case, we literally have a break and a retest, and then it continues. That's another strategy that you can use if you want. You can use it to enter a play, but if I were to use this strictly, I would wait for a candle to close above. How accurate do you think it is? It's a good question. I want to say like 8 out of 10 times it's pretty accurate. Cross on VWAP is a pretty big thing. A lot of people look for it because, like, you can see here, right? It retest here. There's a retest here. There's a test here. Test is here, and then denies it. You can see it all over the place here. See? Breaks below, consolidates, and then breaks above, and we can see it run. VWAP is pretty important. A lot of people view it. A lot of people use it to buy. A lot of people use it to stay in a play. So it's really up to you how you want to use it. But you can see that VWAP is very well respected, right? Yeah, this is something you would use intraday, because if you try to size this up in a bigger time frame, you're not going to get anywhere that much, right? It's a weighted moving average, so it's hard to see these. So like if you look on the daily, it does nothing. So these are all intraday stuff. Does VWAP also act like support and resistance? Yes, VWAP also acts like support and resistance. But yeah, that's pretty much VWAP. You can use it to enter, exit a play, or to stay in a play if it rejects, or whichever. Just know that VWAP is always 9 times out of 10 well respected, but it won't be the most profitable strategy to use. All right, everyone knows pattern breakouts, right? I hope. Stock patterns. Stock chart patterns. All right, everyone knows these. You guys learned about this, right? Chart patterns. All right, cool. So hopefully you learned these. If you haven't, I would highly suggest you learn these. These are going to be a big key factor on developing plays and seeing which way a play would potentially break out. I don't think I really need to go over this, but we'll just take a look at it. Right. So we have Head and Shoulders on Airbnb. If we were to look at this, inverse Head and Shoulders, my bad. Do we have one here? Right here, we have inverse Head and Shoulders. So breaking the neckline is technically your entry. So technically, right here, well, technically this would be my neckline. This is what I would see as my neckline. I am looking for a bounce at the bottom of this range box. It broke below, and then it pulled back in on the daily, and then we're looking to make the breakout, right? Same thing, Amazon. We're looking for a bounce and a breakout. These are all chart patterns. Let's see if I have any more. CCIV, same thing. We're looking for a bounce and a breakout. DraftKings, we're looking for a breakout. So we're looking for a breakout anywhere above this green line is our breakout. That's what a lot of people use to enter a position. There's one thing also you need to note about chart patterns. You'll see a lot of stuff where the wicks are high. Technically, you can throw a range box on this thing, right? So if you decide to throw a range box on this, your entry technically would be on this breakout of the range box, right? Anywhere a breakout on the top of this range box would be your entry. Because typically sometimes you'll see this, but you'll see a breakout. Let's say it were to break out, right? It'll come up, it'll come back down, it'll retest, and then it'll take off. That happens 9 times out of 10. Or if this wasn't a breakout, it'll come back down and come this way. It really depends, but chart breakouts are just one way to enter a play. So, right, so you can see if we did throw that consolidation on the daily, we would have saw that consolidation at the top. So if we do this here, we know that there is an area for it to consolidate on this breakout. Would it be a better sign for a breakout if the wicks are testing downwards? What do you mean by testing downwards? We'll go to the questions after. We'll just knock this course out. So that's pretty much pattern breakouts. Anything that's literally on here, a break in the actual support or resistance in a certain direction is your breakout. That could be your entering and exiting. I wouldn't say exiting, but it's more of entering plays. Exiting would be just taking profit, but the support and resistance would be technically your entry. Let's go ahead and keep pushing. Consolidation breakouts. You guys should know this already. Consolidation. So, like here, let's find a consolidation area. There's nothing consolidating. Oh, right here. All right, so consolidation area, basically VPVR is godlike for this, right? We know there's a consolidation here. VPVR says this is a high node. So breakout on the consolidation area, it's literally a breakout of your range box or a break below your range box. All right, so we have false breakouts down here. But when you get a confirmation for a breakout above the range box, you can expect to see it running, right? Makes sense. Pretty straightforward. Kind of similar to the orb strategy. But yeah, consolidations are basically specific range and then a break above or break below. All right, we already went over orb strategy. We'll go over questions later. Exiting, we went over EMA crossovers. MACD crossover is another one, and low volume. So if we were to look at, if you add that MACD on here, right? So we know momentum's dying on the MACD itself. If we do this, right? Let's say we were to play something on the MACD, an entry would be right here, and then a crossover would be either taking profits, right? Anytime it would cross over is take profit, or if it's actual a trend reversal, right? These are all take profit points the moment it crosses back. Fairly simple enough. You guys understand how MACD works, right? Same thing, low volume. Low volume is an indicator of a reversal change. Right, so we have volume decreasing. You see a peak right here. Whoops. We see this peak right here on the volume, and the moment it starts, volume dies. It starts consolidating. Right, you can technically throw lines on these when you see volume start dying. These are ways for you to show signs of reversal. You'll always see volume either always high at the end of the day or high in the beginning of the day, right? When market opens and when people are starting to get into a new position for market close. If there's news or if it continues to ride out, you'll see it midday. Like here, you can see volume just decrease significantly. Let's find a good trend day like this. Right, we see AMD just continue to rip midday, and then we can see volume increase through here. Right, we all see that volume that's continuing to increase. These are spikes, big pushes, big candles. But yeah, typically a low volume would be the trend is dying. So let's say we saw this. If we were to look at this area here, we're looking at these candles. Volume, that big volume was that big candle. and then we start having all these good green candles, and then from there we start seeing the red, and we start downtrending, right? Volumes decreasing significantly. See a big red. We see this big red here up top, and continues to just die. This isn't a very accurate representation. That's why I don't really use these volume bars. I just play off indicators for reversals. So that's up to you. You can use these. Just for me personally, I don't use volume bars. What else do we have here? Price targets. Like I said earlier, you want to scale at PTs. So if you go back to Apple, right? If we were to enter here in this a break on this consolidation area, so a break above 120.24, I'm going to start scaling at each PT, right? Or each resistance. You can scale at each resistance too. There's a resistance here. You can scale one here and keep scaling at each resistance. Make sense? It's pretty straightforward. You can't really, there's no right or wrong way to exit a play. Just try not to exit it back to break even. Throw a stop loss on there just to secure green. But you don't want to write it back down to negative, right? After you made potential money. All right, moving on. One of the most things that people don't really do, but should probably do, which is hedging. So typically, everyone knows that market dumps are bound to happen. People that play options know you can play both ways, so it's a lot easier to make money. And we're going to do that the option way. So when to hedge. So there's three things that I see fit when I start to hedge is uncertainty, the volatility index, and catalysts, right? So uncertainty is basically a speculation of a market dump, all-time highs, chart patterns. So a bearish chart pattern, we have like an ascending wedge chart patterns. So let's see for an ascending wedge right here. Right, so we have this right here. It's supposed to break to the downside. These are just speculations. Head and shoulders. You don't have to hedge every single position, but typically I only hedge when I see the market have these kind of like SPY. If SPY were to have a wedge, an ascending wedge, or a head and shoulders, that's when I start hedging positions. Only reason being is because if my positions are all calls and I see the market that's about to turn red and I still want to hold those positions, I'll start hedging. If not, then I'll cut my position. Right? So hedges are basically protection for your positions. You have the volatility index. VIX is a formula and should not be charted. I want to make that thing really clear because VIX is a formula, right? VIX is a 30-day formula basically to see the volatility within the next 30 days, right? So this looks like a normal chart, but you can't chart this because it's basically a formula. If you were to chart this, you should be charting VXX. This is what you can chart. This will respect more because this people literally buy into this, right? You can't buy into VIX because this is a formula. There's ways to see better understandings of these. There's VIX can literally play from 30 days out, 1 month out, 2 months out, 3 months out, 4 months out. There is fixed term structure. It's something I look at constantly. So VIX is predicted to increase within the next few months, right? This is basically what it's telling me. The 3-month index, we can see in 3 months that we should be at least at 25. We have the 6 month. 6 months out, we should be at what is this? 27, right? So I typically look at this probably like every 2 weeks, every week, beginning of the week, just to see like where we are, what's predicted in the future through VIX. Because if you were to look at VIX on the daily, you can't really see much, right? Doesn't really tell you. Everyone knows right now that VIX under 20 is godlike. We could see a lot of green if VIX stays below under 20. So everyone just literally marks this here, and then anytime it breaks below, we can see a green days. Anytime this is above, we can start to see choppiness, and then anytime it just starts to continue to moon, it's just bloody, right? Because if we look at March, let's look at March during COVID, right? This is COVID right here. This big spike is COVID. All these big spikes are big bloody days. But just know that VIX is a formula, should not be charted. If you decide to chart on VXX. And of course, catalyst, we have news, like, remember when Trump was still president, he would be like, oh, market is all-time high, right? When he says that, market was red the next day. Were you guys around for that? I'm pretty sure some of you guys were. Like, every single time Trump would say, oh, market all-time high, we immediately would have a red day, or the market would continue. The market would literally start dumping, right? We get news of, like, currently the news that's out right now is the treasury yield, right? So we see that treasury yield is creeping up, and then anytime people start seeing this rising, people want to start getting out of positions, right? And then people want to start moving their money, either staying cash or switching to commodities. Something that holds value, right? So that's why we saw when we first got news about the bonds, the 10 years were at 1.6, we saw a big red on the market, right? We saw one of the big days that were red. So 17 March was what? Wednesday. This thing spiked. This was this was in the AM. Let's look in the PM. So 6:51. At 6:51 on March 19. March 19 was yesterday. So if you look at SPY, what time was this? 6:51. So if you look at SPY on Friday, it dumpstered, right? Because there's news that came out that the yields were going to go at a higher pace. They started creeping back up. Interest rates, all come to effect when people start hearing interest rates are increasing, people start wanting to go cash. All right, those are all signs of catalysts and when you should start hedging or looking to hedge, right? So we're gonna how to hedge. So you can hedge in a sector. So if your ticker falls under the Qs, you can either hedge with another ticker that follows the NASDAQ, and you can play the inverse of it, play puts on that. That's one way to work on it. Or if you are in a call for the same ticker, you can play puts on it in a shorter frame. That works as well. I don't find that to be very beneficial though. But one way is to play this is find tickers that move by the dollar, right? So if we were to look at TTD, right? TTD moves by the dollar, right? TTD literally moves on an average, let's see, the low to the high. That's about like $50, right? That's a $50 move in one day, right? So the contracts might be expensive, IV is gonna be somewhat decent, but that delta is literally where you're gonna make your money. So if we see it move to the downside, if you're hedging to the downside, same thing. You're gonna make that delta to the downside if you're inputs. So you could hedge with inside the same sector. That works. You could play the inverse. So SPY has inverse, the Qs have inverse. So you can play SPY. SPXS is the inverse, the bear market. You can hedge it with VXX, same thing. You have your Qs, right? And then you have your S triple Qs, which is the inverse. So there's playing the inverse is basically the same thing, besides playing puts. A lot of these XPXS and the S triple Qs are gonna be cheaper. They don't move as much. They're not extremely volatile, I would say, but there's inverse ways to hedge. Same thing is commodities. When nobody wants to hop into any index funds, or everyone wants to go liquid, or there's news of like let's say the tech bubble, right? Everyone knows about the tech bubble nowadays. So you can technically move on to commodities. So you have SLV. A lot of people move to silver. A lot of people move to gold. A lot of people move to oil. There's index funds for those as well. Or you can play the oil tickers, right? You can play Exxon. A lot of people play this all the time, right? If oil's moving up and the market's dumping, people switch over, vice versa. Yeah, so that's pretty much hedging. Just the key factors to take away is when to hedge. This is the most important thing to know, is uncertainty, volatility, and catalyst. Those are 3 things you always want to remember. Hedging is fairly straightforward. Most people literally play the inverse and the sector. The 2 big things that people play. Not that much people go to commodities. These are people with big capital that typically switch to commodities. But it's not necessarily saying you can't. You can also hop into commodities as well. But most people play literally inverse in the sector. I think that's pretty much it. So that's pretty much gonna wrap it up for options. Pretty straightforward. So we're probably gonna just do Q&As for the rest of the time. And so if you have questions, go ahead and shoot it, and then we shall go with that. Let me just cut this.